Hello, everyone. I'm Jonathan. I lead go-to-market at the TIE. The TIE is a leading information platform for institutions and traders and researchers, been in the space for 5-6 years. So I'm very excited to be joining this panel with a group of experts in crypto intelligence, forensics, compliance experts. So I think before we start, maybe I would love the panelists to introduce themselves a little bit, your background, and what you're focusing on.
I'm Dominic Schaffer from Crystal Intelligence. I run our North America business, been in the space going a little over 3 years now, professionally, personally a little bit longer, and I've been working with a wide variety of companies like those that are in the room here, but appreciate being here and appreciate you coming in.
Hi, I'm Barnett. I'm the Director of Regulation and Compliance at Chainalysis. I've been with the company for almost 4 years, but before joining Chainalysis, I was a customer. So I was the Deputy Chief Compliance Officer at Gemini Trust for 3 years, and then Chief Compliance Officer at Bitstamp USA for 2 years. And then before that, a number of legal and compliance roles within traditional finance.
Hi, everyone. I'm Mriganka, one of the co-founders and the CEO of Merkle Science. So yeah, we started Merkle Science out of my apartment several years ago. In terms of Merkle, we're one of the leading innovators in the blockchain analytics and forensics space. And yeah, thanks for everyone for being at the 4 p.m. panel and not going out for networking and drinks.
Good afternoon, everyone. I'm Liat Shetret. I'm Director of Global Policy and Regulation at Elliptic, blockchain analytics company. I've been with Elliptic for 5 years now. Before that, I was with a big bank, but spent most of my career building financial intelligence units in conflict and post-conflict countries in anti-money laundering, counterterrorism, finance. I think one of the things I most appreciate at 4 p.m. is the Wicked-themed ballroom that we have going on here. So welcome to our Wicked Ball.
So, yeah, I was looking forward to having this conversation with you guys because as institutions, adoption is increasing in the space. And you guys are the one that's at the front line dealing with evolving regulatory framework, forensics, compliance, and also trying to maintain the integrity of the financial system as we move on to the digital world more and more this year, right? So I think to start off, I will maybe ask you guys more targeted questions, but the rest of the panel happy to chime in to provide additional perspective. So I think my first question is more for Liat. So with your experience in like AML and counterterrorism finance, how can blockchain analytics improve the global fight against financial crime?
So I spent most of my career kind of chasing cash and dirty cash, piracy funds, and at some point kind of like banging my head against the wall because there was no good way to do it. And I think like everybody has a genesis story of how they came to crypto. And mine was I wanted to trace cash better, and that was blockchain. And I think the superpower of blockchain analytics was the ability to see where money is coming from, where money is going, to see exposure to sanctions, to see exposure to dark markets, to see exposure to terrorism finance. And that kind of superpower didn't exist with fiat. We sort of had the last SWIFT message communication as the source of all truths and information. And now I think we have this fantastic kind of pot of intelligence, data, and insights. And so as blockchain analytics companies, we index the blockchain and try to make, kind of translate those insights into useful metrics that help us make risk-based decisions, that help us look at risk scores. One of the best things when it comes to terrorism finance and anti-money laundering is the fact that we can trace and track in real time. And so as criminals chase liquidity and to cash out, with real-time blockchain analytics, we have the capability to block, to move into some kind of an escrow wallet, to really be on top of things and quite proactive. We also have the ability of essentially doing almost sophisticated enhanced due diligence because you can see an on-chain footprint of an entity and decide whether that is an entity that a bank, for example, wants to do business with, or is it a VASP, a virtual asset service provider, that you want to onboard onto your platform. So we have a lot of insights that allow us to do risk-based decisions and take them from a much smarter perspective. And this is like my TED Talk here, so I'm going to stop. I love this topic, but letting others to chime in, but just a few things to throw out there.
Yeah, awesome. Anyone else wants to add additional colors? Yeah. Awesome, cool. Caitlin, I have a question for you, right? So how can real-time risk detection and asset tracing tools that you guys are developing on your Chainalysis team, like help financial institutions improve transparency and collaborations with regulators?
Yeah, it's a great question, and I agree with everything that Liat said. I wish I had the same reason that you did to get into crypto. I fell into this completely accidentally, but ended up in a blockchain analytics firm because I really believe in the beauty of this technology. So I always like to tell the story of the first time that I saw blockchain analytics. It wasn't Chainalysis, it was Elliptic. I will totally own up to that. But I had come from traditional finance in a correspondent banking role, special investigations, like Liat said, you are limited to Swift messages, you're limited to wire details, you're Googling Caitlin Barnett LLC to determine if she's good, bad, ugly, or indifferent, and you just don't have a ton of information. You're always making those best guess efforts. I got to Gemini and I saw blockchain analytics, and somebody showed me how funds were being deposited from a darknet market into a Gemini account, and my mind was blown. I couldn't believe that I didn't have to do a request for information, I didn't have to Google, I didn't have to do any of this additional due diligence. I could very quickly make a decision that this was bad, I wanted to offboard the client, wanted to file a SAR and move on. So for me, that was kind of my light bulb moment with blockchain analytics and really bought into the beauty of this technology. I think, and I'm sure we all have very similar experiences here when we're talking to some of the more traditional financial institutions, especially like the risk and compliance people, they're terrified of crypto. I think post-November and now that we have the new administration officially in place, maybe they are not as terrified, which is gonna be great for all of us up here and everybody in the room. But you can't not see it, right? So if there is a bad transaction, you're gonna see it, you're gonna have to do something about it, and I think that can be scary at times. But to answer the question at large, having this technology, if you can do this real time, you're saving money, you're saving energy, and you're just really able to make those risk-based decisions much quicker. You don't need the 30 days necessarily that you typically do to do an investigation from an alert. You can just very clearly, quickly identify that it's a problem and move on.
Yeah, that's a great answer to my question, so thank you. So Mriganka, I have a question for you. So I know your team is developing solutions for real-time transaction monitoring. I think as the need for crypto business facing a more complex compliance requirement, right? How do you think your team and your solution play into that? So.
Sure. So I guess like at a high level, there's two big problems crypto companies have. And this isn't just like law enforcement crypto teams or crypto exchanges. It's also crypto protocols. Number one, like you need to make sure you're not interacting with illicit funds, and sanctions is the primary attack vector there. There's like 50 OFAC addresses, but 16 million other high-risk addresses. Right? So how do you ensure those addresses don't send you funds into your system? And then, yeah, number two, obviously, with the new Trump administration, there's probably been like 5 different policy changes this week, probably 100 different policy changes, not just in the US, but worldwide that's expected. So how can your compliance team keep up to date with all of this? So yeah, I guess those are the two main problem areas, Merkle being one of the challengers or the innovators in the space. I guess sanctions risk detection is definitely a key priority for us. Real time, that's the important keyword here. Crypto can move across countries very quickly. Criminals can send it across different jurisdictions, different exchanges in less than a minute. So we focus on real-time sanctions detection, not just of the OFAC addresses, but Iranian exchanges, Russian exchanges. Typically, these exchanges change their clusters as well. They're always a step ahead of law enforcement or tools such as all of us. So we work on heuristics to detect them real time as soon as possible so that you don't have that exposure. And number two, our risk engine for the private sector is more enterprise focused, where you can actually change or tweak the different parameters for it. So for example, Tornado Cash is considered sanctions, so you can switch that on and off, and then like say there's a policy change later, FATF comes up with a new guideline, FinCEN comes up with a new guideline, you can actually change these parameters on our rule engine. Therefore, you don't need like developer bandwidth on your compliance teams, right? Like you can rely on a technology vendor as crypto as a technology evolves, as crypto compliance and crypto crime is evolving, you can leverage off your technology vendor to move faster. Yeah, so I think those are two ways, I guess, that we do real-time detection or our tools can be leveraged to solve this pain point.
Yeah, thank you for walking through. It seems like it's evolving and developing tools as the industry become more complex, right?
Yeah, absolutely. I mean, I guess everybody openly admits that criminals are definitely like 2 steps ahead of all the blockchain analytics providers and probably 4 steps ahead of all the others in the space. So keeping an eye on that is probably critical.
Yeah. Dominic, I have a question for you. So we all know the regulatory space is changing and evolving and becoming more complex. What's your thought on some of the strategies institutions can adopt and to kind of make sure that we ensure the transparency and reliance of the industry? So.
Yeah, it's definitely, the timing of this conference was pretty interesting with the election having, or the swearing in having just happened and a lot of change. So very happenstance there. But we're thinking about a few things. Number one, I mean, we see financial institutions, banks, as Beezer was talking about it from Citi earlier, kind of going slowly into the space. So, we see risk profile, risk appetite, kind of going slow and steady, perhaps on purpose to kind of wait and see what happens. But I was talking earlier to Scott from Zero Hash. Right now, there's this cone kind of where the top and the bottom of what's possible has opened up with some of the regulations being rolled back, and so there's more opportunity for new products, new services, new capabilities, but then there's more risk. So the next year is going to be interesting as we wait and see on what type of legislation comes out of Congress and other parts of the regulatory bodies that govern the various aspects of where crypto and the Web3 economy touch regulation, both at the federal level, at the state level. So there's this cone of opportunity that is there with high risk and high reward. But what we're thinking about is, okay, if you're a bank, you're probably not going to be doing the custody yourself. You're probably going to work with a third party. And so Liat was talking about this. It's really important to know who is that third party, who is that custody provider. Are they a VASP, or how good are they? You're going to have good purview into your transactions as a bank with that custody provider, but who else are they custodying for? What kind of transactions are they handling? So just having a very holistic view on and off chain of your partners is important. And as banks look at what kind of projects they launch, whether it's tokenization, launching RWAs, having a security provider with you to do the on-chain analytics so that as you launch your new token, it's one thing to have inside your private walled garden, but once you release it to the public blockchain, you're going to want to have the visibility out there so that when it goes cross-chain, you kind of have eyes wide open on who those counterparties are. And so those are things that we're thinking about. And finally, we see in the not too distant future where I go to a bank, I have my traditional checking account, and I have my digital asset account where I can have Bitcoin, I can have RWAs, I can have whatever, and being able to have financial services around that. If I want to get a loan on collateral on my crypto side, there's a whole new host of services I think that are coming, and just it's a lot of excitement. It's going to be important to work with a partner and understand the technology that's out there. A lot of education and application as this evolves.
Yeah, I think I very agree with a lot of things you say. You echo with some of the other panelists' thoughts as well. Seems like there's a consistency around the group. I think my next question is actually for every one of you. It's more general. I would like to hear your thoughts on how do you think the regulators and the institutions can collaborate together to build more robust safeguards and guardrails for the industry as we continue to develop and evolve? Anyone can start. Yeah.
I think Dominic kind of nailed it already. It's education, right? I think I think we sometimes take for granted that we spend 24/7 in crypto, so we live, eat, and breathe it, but the regulators are not. It's a very small piece of their overall mandate. And I think this space moves faster than any space I've ever seen. And so for them, I think it's really important to work with the industry, specifically the private sector, really the crypto native firms, not just the traditional financial institutions, to understand how are the crypto firms thinking about the new product offerings? What are the risks that the industry sees? Like, what are the ways that we can collaborate to make sure whatever regulation does come out doesn't have to be changed in 3 weeks when we come up with another product, because that's going to happen just by nature of the beast of crypto.
I love what you've just said, Caitlin. I think the challenge that I've had with educating, quote unquote, the regulator has been that we'll educate the regulator, and then a private sector company, maybe one of us, would swoop in and hire them, and then you have to start all over again with the new incoming regulator. So the one thing I would say is that I try to always avoid using the regulator as a term because it's not a monolithic. You've got agencies that have different mandates, they have different areas of purview and responsibility and interests and agendas. So, I spend a lot of time in Washington back and forth since 2019, and I was around with the excitement of the first OFAC sanctioned address. And I think when we look at the technologies that all of us kind of offer to the market, I try to speak to different agencies about how it is that our tools help them make their jobs easier by giving them the eyes and ears that they need into the industry, and that builds trust and confidence and hopefully leads to that education that maybe is maintained within the institution over time. So regulators also use our tools, and when they go and they conduct on-site visits, and they bring with them insights, and I've been very impressed with the abilities of regulators to use blockchain analytics insights to go and have a dialogue with industry partners. And I think if we can come back to this idea of using the data to really build trust between regulators and industry partners, I think that's a really strong message of private-public partnerships and the PPPs generally, and is a really good way to operationalize on them.
So I guess adding on to the public-private partnership piece, obviously public-private partnership is great, and theoretically that's the way to go. There is just one constraint. A lot of enforcement agencies can't reach out to a private sector company unless there is suspicion that there is some illicit activity or a potential threat that they need to inquire about. So that forms a big part of the problem, where I think a lot of private sector companies are afraid to approach them proactively, as they don't want to be on the radar. And then enforcement, even though they want to learn, right? They want to learn about the newer protocols out there, newer types of models with DeFi. They can't reach out unless they see that there is clear illicit activity happening or some degree of suspicion or interaction. So that's where I think new strategies have to be evolved. One is definitely associations like the Digital Chamber of Commerce, right? They would basically put together different initiatives where you can have public sector companies and private sector companies come together in a room and discuss topics informally. And then blockchain analytics vendors, I think all of us serve as that bridge as well, where we've seen protocols or even crypto exchanges ask us, hey, how is this particular regulator thinking about DeFi swaps, right? And the regulators would ask us, hey, what kind of activity do you see going to Uniswap as well, right? Can you give us some insight into what's happening? Or if there's a meme coin, hey, is there anything happening on the meme coin? So I came to realize this a few years into the game, but vendors like us that sit in the middle do serve as information channels as well. And then, the third piece is definitely just more and more education. So the more there is just general education on how each protocol works, each piece of the crypto ecosystem works, and is looking at sanctions risk detection or illicit activity detection, the easier it is to form that public-private partnership as well.
Yeah, no, just add to that, I agree with everything that's been talked about here. Unlike one of the earlier panels where they're trying to incite, conflict, One of the areas where we're thinking about with the public-private partnership is working with law enforcement, especially more on the law enforcement side. Where are the blind spots? And this helps the overall industry, where law enforcement is identifying. There's this part of the scam compounds in Myanmar or in Cambodia or elsewhere. We don't have enough data there. Can you help us get more? And we strategize and go in and get the data through various means to better understand the money trail, so that we can then help law enforcement and regulators shut those types of things down, whether it's scam compounds, which is getting a lot of attention, which is unfortunately deserved, or terrorist financing or other areas that the law enforcement and overall government side of the house globally, not just U.S., but all over the world, they identify as gaps, and we can work with them to go in to help fill those gaps.
Yeah, so I just learned a lot from all four of you guys, and I just have one last open question. Anyone can just chime in. I think there's a consensus around, it's very important to have meaningful public-private partnerships. And you guys been dealing with that and be at the forefront for many years. And looking to this year, right, because there's a lot of new things coming, and political, regulatory, do you guys think that partnership might move at a faster speed? What kind of changes you guys might foresee this year? It's more like an open question. Yeah.
I'm going to jump on that one because I'm going to contradict my previous answer to this and say private-public partnerships are super important, but to get to effective and meaningful private-public ones, we need to also focus on private-to-private partnerships and public-to-public partnerships, because I think one of the things that has been our industry experience is that when we walk into rooms with a public sector, they, as the public sector, are not on the same page. So we end up having dialogues that are really slow. And similarly, if you're building a tech stack, how do you reconcile between on-chain and off-chain data to really give yourself holistic meaning? A lot of that still requires private-to-private sector, discussion and collaboration. So I'm very hopeful for private-public partnerships. I think the intentions are there, the speed is there, the agility is there, but we also have kind of inter-industry work and then public-to-public sector partnerships. But the future is rosy in that regard.
Great to hear. Anyone else want to add?
I see it accelerating, of course, but interoperability is one of the themes I've heard. Interoperability and tokenization, and so really ramping up and investing in those capabilities, so that as blockchain's analytics providers, we can be at the forefront of cross-chain, cross-asset type transactions, so that the trail isn't lost, like, oh, it went over this cliff over here, this wall, can't see it anymore. And so ensuring that we're continuing to make those bridges. And I love the concept of the private to private, public to public, because we're going to be seeing a lot more of that, not just within states and countries, but across countries as well, and across oceans.
Yeah, and lastly, I just think we're going to continue to see greater adoption. I mean, the fact that we have SAB 121 rescinded yesterday is huge for the industry. Every bank can say that they're not thinking about crypto, but we all know that they have been preparing for this moment for quite some time. I'm sure we all have very similar conversations behind the scenes, but the conversations have changed drastically since November, where we were kind of banging on doors trying to get meetings, and now our doors are being banged on to get meetings, to go down and do trainings, and how do we do this? How do we do this quickly? So I think we're going to see a ton of adoption.
Yeah, I mean, I guess I agree with each and every one of them. The thing about having 4 competitors on a panel is we just agree to each other. So yes, of course, with the pro-crypto regime, there's definitely going to be more public-private sector collaboration and partnership. I guess they're not staying away from each other, but trying to get closer. And natural adoption, we're just seeing the price go up, more crypto adoption, a more favorable policy. So it's just inevitable. Of course, the effort needs to be made by the private sector as well to try and collaborate and make sure that they put their best foot forward for it.
Yeah, I think this wraps up. I think, yeah, you guys all make great points. I mean, for us to continue to move forward, there's a lot of collaborations from all different angles needs to happen. But yeah, really appreciate the work you guys been doing for the last few years, and I'm very bullish on what's to come this year. So thank you for your time, and also thanks Halborn for providing this platform. Thank you.
Thank you.